Hi, Assalamualaikum everyone. Let's continue the discussion of this question. This is the fourth video. Okay. Um, Now let's take a look at additional information G. Bills payable of Cerdik of 8 million were drawn in favor of Pandan, and Pandan has discounted 40% of these bills. When we discuss about these discounted bills, okay, bills, simple adjustment is one of the easiest adjustment. Okay, what you need to do, you must always calculate what is the undiscounted. So, and this undiscounted will be need to be eliminated. Okay, so since given in the question 40% was discounted, meaning 60% is the amount that is still undiscounted. What you need to do, you times with 8 million. So you will get 4.8 million. So what you, in consolidated SOFP, okay, under bills payable, it will be eliminated and you need to deduct 4.8 million. And under bills receivable, at the same time, you also need to eliminate 4.8 million. So under current liability, eliminate 4.8. Under current asset as well, you will eliminate 4.8 million. Okay, then this is talking about dividend. So in this additional information, Pandai, okay, remember Pandai is S1. Okay, Pandai is S1. So S1 has declared dividend. Okay, however, Bijak has not recognized its dividend from Pandai. So holding has not yet record the holding received. No preference dividend paid by Pandai, Cerdik and Wave. Okay, when we discuss about dividend, one thing you must always remember, there are sometimes dividend appear in SOCE, statement of changes in equity. As you can see here, for however, in this question, in this bijak, holding, you remember holding? So holding already recorded this ordinary dividend paid and preference dividend paid. Okay, so you will show this in your consolidated statement of changes in equity. Yeah, definitely this will appear in your consolidated statement of changes in equity and the group retained profit column. Because this is actually dividend paid by holding. However, in this statement of changes in equity of S1, S2 and S3, there is no dividend. Okay. Remember, first you must find from this statement of changes in equity. Then after that, based on additional information, okay, S1 actually declare final dividend which do not appear in the financial statement prepared in the question. You have, however, you have to take into account this adjustment. Okay, since holding, since S1 declare dividend of 15 million, remember holding portion is actually 80%. So out of 15 million, 80% is equal to 12 million. Holding will receive 12 million out of this 15 million. Okay. So what you need to do, you will only show the balance, which is actually dividend declared by S1 to NCI. That will be the amount that will appear. So you can see here in this answer, in this, here this is 3 million, 15 minus 12 in consolidated SOCE, as well as in consolidated SOFP. Okay, you will show this dividend here as current liability. So there are two places for you to show the answer in SOCE. Okay, consolidated SOCE here and consolidated SOFP under current liability. This will be under NCI column. Okay, this is NCI column. So dividend, just now I mentioned dividend of holding. Remember in SOCE of holding, you can see we have 12 and 8. So definitely you will show this SOCE in this consolidated SOCE amount of dividend. Okay, and this amount of dividend must be only dividend of H. Okay, dividend here in NCI column will be a dividend of S. S only, but to NCI, it will appear in NCI column. Okay, so this is dividend. Okay, let's discuss additional information J. This is depreciation. Okay, don't forget that we have to provide for depreciation as well. Okay, there are few places that you will have to adjust for depreciation as in additional information. Like here we have, remember, equipment. Equipment was sold at loss of 1 million. So definitely there will be adjustment to depreciation because if you can still remember, I did mention. So if it is URP, okay, so the amount of URP will be eliminated. Okay. However, the amount of depreciation will be added. Here in this situation, it is UR loss. What happened? It will be added. UR loss will be added when you calculate, when you prepare the SOP-LOCI, and depreciation will be depreciation under provided will be which will be deducted. So this is the difference between UR loss and URP. Okay, that will be the adjustment. So you will multiply 1 million times 20%. Equipment, depreciation of equipment is 20%. You multiply by 1 million, the UR loss. Not only that, you also have to calculate depreciation when we have revaluation of asset of subsidiary. Remember at the beginning of the year, in paragraph in page 1. Okay, so for Pandai Berhad, so if it is land, there will be no adjustment of depreciation. This is land. However, here when we have okay, this is for S1, but we have for S2 actually. Okay, for S2 we have plant. You also will have to adjust for depreciation of plant. There will be under provided depreciation of plant, depreciation of plant under provided. What you will do, you will calculate also 1 million. You will calculate 1 million times. Okay, for plant, the percentage is 10%. So 1 million times 10%. That is actually based on information where the asset of subsidiary was being revalued on the date of acquisition. So it will be 1 million times 10%. Okay. You must understand for depreciation, it will be stated either monthly or yearly. So bear in mind, this is yearly basis. Okay, identify yearly basis in this question, meaning we will consider the depreciation as 1 year. You don't need to calculate whether like 6/12 or what. You don't calculate 6/12. Even though like in this question, the date of acquisition of S1, okay, S2, sorry, I would like to highlight. S2 here we have Cerdik. Okay, remember Cerdik holding acquire Cerdik on 1st July 2018. So we have acquisition of subsidiary during the year where all the amount in consolidated SOP-LOCI for this subsidiary too, you have to multiply with 6/12 because it was acquired during the year. However, for depreciation, because depreciation policy is yearly basis, so you don't have to multiply with 6/12. That's the difference. Okay. Basically, this will be the answer when you calculate. Okay. I did mention, okay, what you need to do. Remember, because this is a holding plus subsidiary 1 plus subsidiary 2. And we have associate as well in this question. Please do not include revenue of associate. So this is how do you adjust. You have to eliminate again on disposal of PPE 2 million and as well as loss on disposal of PPE. This is in additional information A and B. Okay, add info A. This is add info B. Remember? And then this is the adjustment of depreciation. Okay, this is disposal of equipment. Disposal of equipment is just now in additional information B. Additional information B. Remember just now I mentioned this add info B. Okay, and this plan is actually a revaluation that takes place on the acquisition date of S2. Okay, which is 1 million times 10%. Okay, this is 1 million times 10%. What you can do, you can deduct from here, or you can you can add back. You add from selling and distribution expense or admin expenses. Okay. So this 2 million is actually from service income. Service income. This is intra-group service income, which is additional info E. Okay. And can you see here the same 2 deducted from admin expense? This is as well info E, because from the one from point of view of service provider, it is income. And then from the other point of view, the other company, it is expenses. So you will eliminate both 2 million from additional information E. Okay. So this is how you prepare PAT. Working one. Okay, always remember working one is for PAT to attributable to NCI. So we have 1 year for Pandai. And then remember, Cerdik was acquired. S2 was acquired on 1st of July 2018. Okay. So what you need to do when you calculate, you will start with profit after tax of subsidiary from the question. From question. Can you see in the question? Okay, this is given in addition in the SOPL 49. Can you see here we have 49? Okay, and so this is S1 49 S1. This is whole 1 year. Okay, 12 months. However, for this one is 6 months, and this is loss. Okay, loss of 5 million. So it will be shown as negative loss of 2.5 million here. So this is basically 5 million times 6/12, because this subsidiary was acquired during the year. And then remember, adjustment for plant and inventory here, because seller is actually subsidiary. Okay, this is additional info C. This is additional info D. And then this is revaluation of subsidiary, asset of subsidiary on date of acquisition. Remember 1 million just now, increase in fair value on the date of acquisition times 10% for plant. Okay, so what you need to do, you will calculate with the percentage of NCI. Don't forget that NCI here. Okay, so here NCI is 20%. Remember the increase. Okay, and then we have NCI here 40%. And this increase takes place at the beginning of the year. So the whole 1 year percentage of NCI is 20%. You don't have to apportion, unless if the increase is during the year, then you have to apportion this amount of PAT after adjustment when you want to calculate NCI portion. Okay, then we can proceed the discussion in the next video. Thank you for watching.